Good afternoon, everyone. Welcome to Stock Market Today. My name is Ken Shreve, joined by our news editor, Ed Carson. On today's show, of course, we're going to talk about a really strong up day for the market that saw gains of better than 2% for the Dow, S&P 500, and NASDAQ. Weakness in the U.S. dollar, a big drop in the 10-year Treasury yield. But before we do that, Ed has got a list of 3 stocks to watch. What do you got, Ed?
Yeah, I want to take a look at Eli Lilly, Cardinal Health, and Cheniere Energy. All did very well today.
Excellent, excellent. All right, well, why don't we start our discussion by talking about the Qs here. You can see a gain of about 2%. Looks like the second day of a rally attempt. Ed, what do we make of a day of market action like this, where we have bullish gains, still early in the rally? What's your take here?
I mean, it was bound to happen. At some point, we were going to have an actual solid, real gain, broad base, and we got it. I mean, so we were oversold. The fear gauges had been high. There was a lot of indicators that at some point we're going to get a bounce. And we got the bounce. Now it's just a question of, can we get more? I think we have to keep in mind is that this was a solid day. It wasn't an amazing day. But the best days in market history are in bear markets. So, one day is not enough. Nice sign here. There was some nice action among leading stocks, but just have to put in perspective. We're at bear market lows, so we got to bounce. What's great about a market uptrend is that you have days like this, and then maybe a quiet day, and then another day like this, and then some quiet gains, and you trend higher. One day out of 20 is not enough.
That's right. That's right. It really just all about looking for meaningful signs of accumulation as the indexes try to bottom here. Here's a look at the S&P 500 through the SPY. That was up about 2% as well. First day of a rally attempt. So again, this could have been short covering today. You mentioned that the market was very oversold by just about every indicator. There was a lot of fear in the market. So a bounce was expected after 6 straight losses for the S&P 500. But we'll see where it takes us. Take a look at the Dow Jones Industrial Average. Ironic, because Apple really had a rough day to start when they talked about maybe slack iPhone demand. That closed off lows. You see the Dow Jones here up 1.8%, it looks like, on the day. And last check, small caps really outperformed. Take a look at the IWM here. That was up well over 2% at one point. Wow, look at that! Ends with a gain of 3% on the second day of its rally attempt. So I guess the takeaway, Ed, is can't really make a whole lot about a big up day. We want to see some follow through, see more percentage gains like this, preferably in some volume, and then maybe the market will make a better case that it's hit a bottom here.
Yeah, and of course, Treasury yields are so crucial to this. I mean, why did the market bounce today? We were waiting for the bounce. Well, we weren't bouncing because the yields kept on rising and rising. We actually got to 4% overnight, so it was not looking good. But then the Bank of England came out and said, we're going to restart bond buying because they've got a bunch of issues as well. That ultimately triggered a big decline in Treasury yields. All it's doing is just coming down. It's not even coming down to its 10-day line. It's basically wiping out this week's gains is all it did. So, if bond yields go back up, it's hard to see this market rally attempt, having much, being sustained. So, really have to be cognizant of the Treasury yield and the dollar, which is a related thing. Because there's not just. I think people have to put in perspective. I mean, people are probably so thrilled to have this one good day. It's just one day. And,
yeah. It's pretty amazing. If you just look at this is a price chart of the 10-year Treasury yield that we're looking at, and it was looking very, very extended headed into today. Just looking like it was due for a pullback. It was down 23 basis points today to 3.73%. Like you said, still holding above its 10-day moving average. That just gives you an idea of how far it's gone in a short amount of time. And then also the U.S. dollar you mentioned was very, very weak today. The market wants actually to see a weak dollar, and it's gotten nothing but strength recently, but a pretty sharp decline in the UUP today, down 1.3%. All right, well, let's take a look at some stocks on the move today, and we'll start by Eli Lilly. which had a nice breakout from a gap up and breakout from a base today. What was the news around Lilly today, Ed?
Well, the news around Lilly was the news around Biogen. Biogen and its Japanese partner announced positive results from a late-stage trial of its Alzheimer's drug. So Biogen rose something like 40% today. Eli Lilly has a similar drug in clinical trials as well. So the thinking there is that, hey, this might go there. I mean, maybe analysts will weigh in and say, well, no, I don't really think so. We'll have to see, because gap ups in a bear market are sort of tricky, and it's hard to know how much should you price in good news from some other, company's drug. But nice action here. Obviously, Eli Lilly has been acting very well. It's got a good pipeline, obesity drug, and some other stuff that has been looked really strong. So it closed above a buy point. RS line already been hitting highs, surging higher, massive volume. So a lot of positives here. It is tricky because, again, we're in a bear market. We just gapped up. I think one thing is that if you do take a position in anything, even a stock that seems really solid, you might want to think about them as more swing trades, because it would not be surprising to see reversals, especially if the market came back.
Yeah, this is a technical setup when the market is in a confirmed trend, and we're seeing institutional money being put to work in stocks. This is a technical setup that can have staying power, and you'd expect to see follow through here. One thing, when I look at the weekly chart here, Ed, you can see that Eli Lilly has formed a series of bases. So some people would argue that this is maybe in a later stage run, but maybe things are a little different with a company like Lilly, because you mentioned that really strong pipeline that should be able to fuel additional growth here. So does this look like a later stage base here, or do you think the pipeline is strong enough where that it doesn't matter that it's a later stage move?
Well, obviously, one reason why this stock has been doing so well, because it doesn't have the most tremendous growth right now. It's people are betting on the future. So some of that's been priced in. I mean, that's a reason why it's been doing so well. So, but I just think, just in general, with the market, you just have to be very careful, is that this could easily come back to the 50-day line or the 40-week, come back and pull in this situation, a series of upticks. And so that's just something that investors should be aware of.
Well, the next read we're going to get on Lilly's experimental Alzheimer's treatment isn't going to be till the first half of 2023. So we're not that far from 2023. So we'll be hearing more about Eli Lilly's Alzheimer's experimental drug soon. All right, let's move on and take a look at Cardinal Health. CAH is the ticker symbol here. It is a drug distributor, among other things. And this was a nice breakout recently. Not Canon. Come on, CAH. Here we go. It's coming. Yeah. But Cardinal Health was moving out of a cut base, and let's see, our chart is not going to.
But yeah, actually, yeah, it sort of pulled back to the 50-day line, sort of pulled back into the buy zone. I mean, with the market being so weak, that's just a situation there. But it's rebounded nicely. Yesterday, it sort of bounced off its 50-day line, 10-week line. Today, it went through its 21-day line, broke a downtrend. So some nice action there, above average volume. A lot of positives in that regard. Obviously, it held most of its gain from July and early August. So a lot to like about how this has been acting here. Yeah, it just came back to where you expected to find, sign of support. It's doing that. Again, the question is, in an uptrend, you'd be thinking this is probably going to keep going. This is going to keep going. But this is a bear market. So if the market falls back, I mean, Cardinal Health might outperform, but that doesn't mean it's going to keep going up. It might just fall less, and you never know when a profit warning can come out with any stock. And Cardinal Health looks great, but I just think I don't know if I can hammer enough. The point is that this is just not a great environment for buying stocks until we get real signs of the broad market is really going to have a sustained uptrend.
Yeah, well said. I mean, I think with Cardinal Health, I mentioned the nice heavy volume breakout from this cut base, and it's just making a really nice first test of its 10-week moving average. So again, when the market's in a confirmed uptrend, this is good technical action. We're still in a market correction, so some of these technical setups they end up not looking so great. But for this one, anyway, it's doing what you'd expect a good stock to do when it breaks out, and that is find support at the 10-week line. So, all right, let's see if the charts are going to cooperate here. We'll finally take a look at Cheniere Energy, which is LNG, and this is a stock that made a nice move above the 50-day moving average today.
Yeah, it obviously come back quite a bit. Unlike crude oil producers and natural gas producers, these LNG plays like Cheniere, they might have just a healthier demand outlook. I mean, the spread between U.S. natural gas prices and European natural gas prices should be pretty strong going forward. I mean, there was the pipeline explosions that have happened the last couple of days, but obviously Europe is weaning itself off of Russian natural gas, and that provides support. So there's reasons to believe that should be a sustained demand trend for years. Really nice action today, above average volume. Found support right around the old base. I don't know if this is a real buy point, even in a great situation. I mean, you can do that. It's because it was sort of pretty violent, not violent, but a pretty sharp drop. I suppose you could play it off of that. But definitely, if nothing else, LNG should be on your watch list because it's been such a strong relative strength performer, especially in these last few months.
Yeah, absolutely. It looked like there was a little volume behind the move today above the 50-day moving average, and I dropped this red line in here just to show you what it looks like when a stock retests a prior buy area, and that is what Cheniere did today. So even though UNG, the natural gas ETF is not looking all that healthy, you do have a name like Cheniere that is still showing pretty good technical strength here. But yeah, natural gas prices have been under a lot of pressure, down more than 20% since mid-September. And this is a look at the UNG natural gas ETF that still holding above its 200-day line, but you can see under a lot of pressure since the middle of the month or so. All right, Ed. Well, thanks very much for your input as usual. And so the main takeaway from today, you get big gains for the stock market. It's not really the time if you've been raising some cash. It's not time to put all that money back to work in the market. We want to see the stock market prove itself a little more here.
Yeah, I mean, it's sort of like this. It's sort of like if somebody treating you badly and badly and badly, and then they say something nice to you, it doesn't mean that everything has changed. It's the market has been really mean to investors. Was sort of nice to us today. Let's see some more strength. Let's see that really get in there and really don't be aggressive or maybe even stay entirely in cash until we see some more strength.
Okay, well, that sounds great. Ed is going to be in the host chair tomorrow morning for IBD Live. So if you haven't checked out IBD Live, be sure to do so. We go on air 10 minutes before the market open each day at 9:20 a.m. Eastern time and 6:20 a.m. Pacific time, and we'll take you up till about an hour and a half of market analysis and commentary. So we'll give more perspective on today's market action. You want more information on IBD Live? Just go to investors.com/IBD Live for more information. So hope to see you tomorrow morning. Until then, have a great afternoon, everyone. We'll see you back here tomorrow.